Good morning, ladies and gentlemen. Welcome to this panel discussion. I'm Ben Rose. I'm a partner and head of shipping for Asia at Norton Rose Fulbright. As everyone knows, Chinese sale and leaseback financings became very popular after the 2008 financial crisis and now account for over 15% of the global ship finance market, with Chinese leasing companies controlling around $100 billion in shipping assets. Last year at this conference, I was asking my panelists about the decline of traditional bank financing and the rise of Chinese leasing in Korea, and we discussed whether this was a long-term shift in the financing techniques used by Korean ship owners. But over the last year, of course, the global shipping finance landscape and the world has undergone significant change as a result of the escalating trade tensions between the US and China. And Chinese-linked vessels have been targeted by the US's drive to curb China's dominance in the maritime industry via the imposition of tariffs and port fees under Section 301 of USTR. Meanwhile, China has imposed reciprocal measures against US-affiliated ships. So this really impacts two key sectors, at least for the sake of this discussion today. So the first limb subject to US tariffs under Annex 2 of USTR is against Chinese-built vessels. And then the second limb under Annex 1 of USTR is imposes service fees against Chinese-owned or operated vessels entering US ports. And that includes, most likely, ships financed through Chinese leasing structures, whether the lessor or its parent company is located in China or indeed Hong Kong. And whilst we're seeing some early attempts to restructure Chinese leases as a result of this, given the uncertainty that the tariffs regime has caused, and the fact that China-linked vessels are perhaps less competitive when trading to the US, we're starting now to see a wave of refinancing activity. So as the future viability of Chinese lease financing, at least for owners with no other connection to China, remains uncertain, will ship owners look to diversify their funding sources away from Chinese leasing towards more traditional structures offered by non-Chinese financiers and ECAs, and could this present an opportunity for international banks and Korean ECAs to regain market share? So I would like to introduce my panelists. So I have Mr. Bon-Sup, Director of the Maritime Project Team 2 at KEXIM. I have Mr. Yeop Hwang, Deputy Director of the Maritime Finance Department of the Tanker and Offshore team at Keijsers. I have Ms. Sei-Hee, Team Leader of Shipping Finance Team 2 at KOBC. I have Mr. Brandon Kim, Team Leader of Maritime Finance Department 2 at KDB. Mr. Joost, Keijsers, Managing Director and Head of Global Export Finance at ABN AMRO, and Mr. Alexander Savabini, Senior Vice President at DNB. So a very large panel. We will try to cover as much as we can in the limited time that we have. So the first topic we will talk about is the impact of US tariffs on shipbuilding. And so my first question to Mr. Koo at KEXIM. So with the imposition of US tariffs on Chinese-built vessels, are you seeing or do you foresee a significant shift in new building orders from Chinese to Korean shipyards? And what influences ship owners when making that decision, and how does financing influence that dynamic? And what's the role of the Korean ECAs in supporting that?
Okay, first of all, thank you for having me today, like 2025, the Maritime. Yes, it's such a great honor personally. And in terms of the questions, considering the United States and its allies are the core of the major the container and the tanker or other type of vessels business. And many ship owners and the sponsors are under the United States influence. I think there's a recent political measures by the United States on the China, such as the port fee or the tariff, will definitely have a significant impact on the shipbuilding and maritime business around the world. Let's think about the relationship between the China and United States. There is no tank, no missile, no skirmish, no airstrike, nothing else. Yeah, it's not like Ukraine and the Russian relationship. But think about all the strategic industries right now, the renewable energy or the artificial intelligence or the shipbuilding, the microchips, something like that. We can see there are many conflicts and the neck and neck race between the two countries. That means I think the two superpowers are already at the full scale the economic war. And in that regard, these political measures currently United States are imposing on China must be viewed not merely as just one tariff or the one port fee, but as a part of collective strategy, like to restrain China. So consequently, I believe that these political measures by United States will be the game changer in shipbuilding industries, and obviously the direction to some extent from China to Korea or the Japan or the Singapore. And I think in terms of the major factor for the ship owners, geopolitics is always important issue for the ship owners, but this is not the only factor that the ship owners consider in selection of the shipbuilding countries or the yard. And they always make a comprehensive assessment about the price. Obviously, it's the first top priority for them, and the other is the quality or the delivery level of the technology the shipyard has, etc. I think that's not going to change forever. It's kind of the golden rule in this industry. But today, I just want to add one more thing. It's innovation. In the near future, innovation, technological innovation through the artificial intelligence or the research and the development will definitely separate the winner and the losers in this market. So yeah, that's kind of the most important thing, I think. Let's say, for example, one country has kind of competitive edge over the rival countries. It can be lower labor cost, or it can be the better quality or the experience. But in the era of innovation, those factors will be wiped out. Yeah, will be irrelevant, and it can only buy the very short time. So if history is a guide, I think the future is uncertain, but upcoming innovation is certain. So what matters here is who will take the initiative and lead the market between China and Korea. Yeah.
Okay, thanks. Maybe I could move on to Ms. Han, particularly from the point of view, I guess, of Korean shipping companies. Have you seen increased interest from Korean shipping companies in building domestically? And do you have any recent examples? And how is KOBC positioned to support with domestic shipping companies?
Okay, thank you very much, Ben. Yeah, since the announcement of USTR majors and the China-built vessels, some Korean shipping companies have started to consider the domestic orders to reduce the geopolitical issues. However, I think there seems to be only a limited number of the actual orders so far. In my opinion, there are two main reasons for this. The first, the price gap between the Korean and Chinese shipyards. The secondly, the limited capacity at major Korean yards also makes it difficult to consider the domestic orders in practice. Meanwhile, considering the construction period of most of the vessel, it takes more than 2 years normally. So many companies, many shipping companies reasonably expect that the U.S. and the China relations could ease during this period. And also, in the short term, they can also adjust vessel deployment plans depending on the place of build to avoid the potential possible penalties. So as a result, except for high-value vessels such as LNG carriers or the ultra-large container vessels, some Korean ship owners are expected to continue building most of their vessels in Chinese shipyards for the time being. So rather than the focusing only on the supporting domestic holders, KOBC is focusing on more comprehensive financial support to help Korean shipping companies improve their overall competitiveness. Okay, thank you.
Okay, thank you. Perhaps I can turn to Brandon at KDB.
Yes.
To ask, I guess, firstly, what trends you're seeing as well for this, Korean-built versus Chinese-built vessels, but in particular, what is KDB's strategy for supporting Korean shipbuilders and owners to regain potentially market share from Chinese competitors?
Yes, first of all, this is my pleasure to be here again since my last presence in 2016, and it's been already nine years. And honestly, from the commercial banking perspectives, and there is no significant difference in financing for Chinese versus Korean built vessels. The recent U.S. port fees may bring some negative effect to Chinese vessel owners, but the increased cost from port fees can be, passed on to, the cargo owners on charters. So the effect will be very limited. And of course, this kind of, the political risk and uncertainty is unwelcome by the bankers. But as long as the charters or the ship owners are maintain solid credit quality, and the project is backed up by stable cash flow from long-term employment, then the bankers are willing to, finance either type of the vessel. And KDB has a plan to adopt one-team strategy, which is benchmarking from the Japanese model, where shipbuilding, shipping, and cargo, financing, and government sector collaborate together to build some solid home market. Having strong home market is very beneficial for technological development and only securing the market leadership. So if there's any chance of developing new projects from Korean companies, and KDB is willing to provide strong policy financing, expecting boosting their innovation and eventually helping them to secure market position.
Okay, thanks very much. Mr. Hwang, at K-Shore, I would like to just ask a similar question, how K-Shore is supporting both Korean and international shipping clients, and how, or if K-Shore is adapting its risk assessment and insurance offerings to support clients in light of these geopolitical tensions.
Thanks for having me. It's a great honor to be here. And since the answers were longer than I imagined, I'll try to keep it short because we're getting closer to lunchtime. So, and first of all, I would like to mention our two products. The first one is medium and long-term export credit insurance, enabling international shipping companies finance Korean vessels. Number two is export infrastructure insurance, which supports Korean shipping companies buy Korean vessels. In other words, we're connecting shipyards, ship owners, and bankers to keep the global trade flowing.
Thanks very much. And let's turn now for an international bank perspective to Joost at ABN. So as an international bank, how are you viewing the competitiveness of Korean shipyards in this new climate? And are you seeing more non-Korean clients interested in Korean new builds now?
Thank you. And thank you, Marine Money and Partners, for inviting us to this very interesting conference. As mentioned, Korean shipyards continue to demonstrate strong competitiveness, particularly in high quality segments, such as the LNG, container vessels, offshore units, dual fuel, and so on. The imposition of the US tariffs on Chinese-built vessels accelerated the strategic pivot toward Korean alternatives. And that's also, if you look at our clients, our European shipping clients, we definitely observe a market increase in client interest. We are reassessing geopolitical exposure and seeking long-term reliability. Korea's advantage lies not only in the technical excellence, but also the robust support of the domestic ECAs like Keijsers and KEXIM. These institutions play a pivotal role in enhancing the financing proposition and offering attractive terms and risk mitigation that make the Korean yards a compelling choice. That said, the Korean yards are facing capacity constraints and potential cost inflation. So in the short-term window of opportunity, we definitely see an increase. The medium-long-term competitiveness will depend on whether the Korean yards stay ahead technologically and also price competitive towards China. But overall, we see a strong interest of our European shipping clients, and we expect that will continue in the coming period.
Great, thank you. And then I guess finally to Alexander, I mean, similar, but I just want to get your views on this shift in demand and how it affects kind of ECA-backed transactions for international owners, and how you see how important Korean ECA support is for non-Chinese and international ship owners.
Yeah, well, first of all, thank you very much for having me today. To answer your question, I very much echo what Joost was just saying. And as has been mentioned before, the shipyards in Korea and in China are pretty full right now. So most of the orders being placed are for the end of the decade. But what we're seeing among my clients in Norway and beyond is that they're all concerned about avoiding increasing their exposure to China. And this is obviously because of the tariff situation, but it's creating a very strong tailwind, which should favor Korean shipping. And I think that's where the ECAs are particularly important in ensuring that the terms that can be achieved here are competitive enough to really take advantage of that momentum. And I think particularly on the stronger, more complex, the larger, more complex transactions, that becomes even more important.
Great, thank you. And I think now we'll move on from shipbuilding and kind of discuss the second topic, which is the impact of tariffs on Chinese leasing. And then why don't we stick with you, Alexander? How do you perceive the decline in Chinese leasing as a financing method? And are international banks and ECAs seeing increased demand for, I suppose, more traditional financing methods?
I think your introduction really summed it up quite well, and it was quite amusing to hear what we were talking about last year on the panel. It's quite an interesting time because we've gone from a period of building market share for Chinese leasing to a period of probably being slightly out of favor. What I'm seeing again with my clients is that any processes that were ongoing for Chinese leasing at the start of the year have been frozen, and all of my clients that have Chinese leasing in their portfolio are either refinancing them, restructuring them, or finding other ways of addressing the perceived risk of sort of implied Chinese ownership. So that's really creating a bit of a void, which is being filled by other capital sources, including traditional ship financing, where we're seeing the Korean banks, Taiwanese banks, Japanese banks, European banks, all banks really providing extremely competitive terms. I think some of the most competitive terms that I've seen really in my career. And I think, again, there the Korean ECAs are very important in adjusting to this new sort of competitive landscape.
Great, which then brings me on nicely then to ask Mr. Hwang at Keijsers. So with, as this topic is about US tariffs targeting Chinese-owned and Chinese leased vessels, what opportunities do you see for the Korean ECAs to support refinancing for both Korean and international ship owners?
Thank you for the question. After the US significantly changed its tariff policy against China, we are indeed looking at more new opportunities than expected, given that the Korean docks are mostly full these days. And Keijsers has recently started to review and consider refreshing our medium and long-term insurance program to support not only new builds, but also refinancing of second-hand vessels. So I have to be cautious because the process is still underway. But I think this reflects that Keijsers is listening to our clients' needs.
Great, thank you. And then to Ms. Han, KOBC. So unlike Keijsers, KDB, and KEXIM, KOBC is limited to supporting Korean shipping companies. And so with the imposition of tariffs on Chinese-owned vessels, have you seen an increased demand from Korean shipping companies seeking to refinance with domestic financial institutions, including KOBC? And do you have any examples that you could give to the audience?
Actually, based on our internal analysis of ship finance data from the past 3 years, covering 100 Korean shipping companies, we found that the shares of Chinese leasing has risen steadily, reaching 32% in 2024, and with the average of about 20% over the past 3 years. We believe that the recent USTR measures on Chinese owned vessels are likely to slow down this trend. Since last year, we have received actually many inquiries from the Korean shipping companies looking for the refinance their Chinese lease structure to reduce the geopolitical issues. So in this year, we expect we undertake about $400 million in refinancing of the Chinese lease deals. So as a recent example, KOBC support refinancing for 2 LR2 size tankers under the sale and leaseback deal structure, and the total funding size was about $88 million. We expect this refinancing demand to continue next year as well. So KOBC will continue to provide proactive financial support to help Korean shipping companies secure the stable funding. So,
thank you. And to Brandon, KDB, how is KDB responding to this potential increased demand for refinancing from ship owners, both domestic and international? And as KDB, what changes are you seeing in either deal terms or structures, and are you adapting your own strategies to meet this increased demand?
Yeah, actually, KDB also shared a similar experience. So the refinancing is on a rise for both Korean and international ship owners due to two major factors. The first driver is the higher vessel prices enable the ship owners to cash out their equity position. That was the biggest driver. And the second driver was political, risk. Many of the ship owners who used to finance from China, they want to shift away from the Chinese lease finance. So they try to use, more traditional bank loans. So traditional bank loans, which is mostly from European banks, is getting popular with standard terms and less political risk. And Japanese operating lease, JOLCO, is getting popular again because it carries also the less political risk.
Great, thank you. And then to Mr. Koo, how is KEXIM collaborating with Korean and international banks to offer perhaps attractive alternatives to Chinese leasing? Do you have any new strategies or products that you're developing in that respect?
Yeah, that's very good question, but really tricky to answer. Actually, under the current OECD guideline, it's really hard to provide a new or attractive or some creative alternatives to the Chinese leasing product right now. However, I think we can talk about the OECD guidelines later on. So let's get back to what KEXIM is doing right now. And recently, we are trying to find somewhat different options. For example, the stretch loans or the sub-participation under other financial institutions program, or sometimes the syndication with the other countries, a special program. For example, the French tax lease, obviously, and Japan, the JOLCO. But there's one more thing today I really want to introduce for our distinguished guest is KEXIM's arranger function and its subsidiaries' participation. Technically, the KEXIM headquarters can arrange the subsidiaries' participation from the Singapore, the Hong Kong, London, the big subsidiaries that the headquarters has. It's a very strong, small, medium-sized, but a very strong one. And I think the total amount can be slightly less than 100 million, but it's still, it can still give more flexibility for the clients and partner banks. And more to the point, it may sound a little bit boring or too old-fashioned, but the KEXIM management, they always emphasizes market and market and market, and encourages to go to the market and listen to the experts and to build a strong relationship with them, like today, the Maritime event. Yeah, that's kind of the everything we are trying to right now, and we are quite too open to the new possibilities, even though the OECD guideline is still a kind of blocking us. Yeah.
Great, thank you. And then I suppose finally on to Joost for, again, the international bankers' perspective. I just wanted to ask how you see the role of ECAs, in particular Korean ECAs today, and whether you're seeing a shift in preference amongst the international ship owners from Chinese leasing to ECA-backed, more traditional international bank financing.
Yeah, thank you. Definitely. Overall, the traditional Chinese leasing has become less predictable and more politically exposed, leading to a clear shift. Also, as mentioned by my neighbor, we see clients enjoying the JOLCOs, especially when they require very high leverage. However, both on the Chinese lease and the JOLCOs, we do get the comment that the structures are very rigid in case of waivers, sell of assets, and so on. That's not very flexible. In contrast, ECA financing has the benefit of very low capital, at least for European banks, and ECA-backed financing offers transparency and predictability, especially with the Korean ECAs. Also, as mentioned by Alexander, we do see highly competitive pricing, which can be sometimes challenging for the banks. In a recent transaction, especially in the Greek market, we see also entering of Asian banks in ECA-backed financings, for example, the Taiwanese banks. But the summary, yeah, the retreat from the Chinese leasing is creating a further grant for Korean ECAs and international banks, yeah, to work together and help our international clients.
Great, thank you. So the third topic we're going to discuss, and I suppose we'll have to discuss it quite quickly, given that we've got 5 minutes and 6 panelists, was just generally about market trends, deal terms, future directions, etc. So perhaps, Mr. Koo, you mentioned the OECD guidelines, but so why don't we start with you, just in terms of how the OECD guidelines are perhaps shaping ECA financing in Korea, and if you wanted to touch on the net zero framework, how, you know, KEXIM's approaching decarbonization.
Yeah, in terms of the OECD guidelines, the guideline actually plays a very decisive role in terms of the Korean ECA financing. It also applies to all ECAs around the world. So it's like a Bible or the worldwide regulation for ECA bankers. Actually, it specifies all the details in terms of the financial terms and conditions, such as the pricing and the tenure, the repayment, or the maximum amount we can support to prevent competition with the private sectors. Despite this kind of the good intention and the purpose, there's one lethal problem. It's really hard to change. As Ben, you mentioned, there are many big and urgent issues, and I think the net zero framework is very good example for that. And increasing scale of the maritime a project and complex structure in a financial solution, those are also a textbook example of the market transitions. But however, the problem is that those issues have not been adequately reflected into the guidelines for some time. And recently, all stakeholders, including the KEXIM, are working together to reflect these issues into ongoing OECD guideline revision process right now. Unfortunately, the process itself is not faster than expected because, the member countries has very different voice in terms of the every issues, and what's worse is the decision-making process itself is always kind of a unanimous vote, and maybe that's why usually people say, just complain that the ECAs are not as flexible as the commercial bank. Anyway, today, what KEXIM can promise is after once the guideline, the revision process is over, we're going to streamline our internal policy to provide more kind of the market-friendly solution, because in the revision process, KEXIM's position is very simple, even though there are many issues. Our position is to make the guideline, the marketable again. It's very simple, so we're quite open about that. Yeah.
Thank you. And Alexander, how are you, or how do you view Korean ECA financings? How are they perceived in terms of, in the context of sustainability and ESG? How important do you see the role of the ECAs?
Well, overall, I'd say Korean ECAs have a very strong standing in Norway and international in general. I think DNB's probably done close to 40 ECA-backed transactions now, and through that process and through those sort of a few years, we've seen an increase in flexibility and in the process overall, and certainly a strong willingness to accommodate for sustainability features. so I think which is very important for the ship owners as much as DNB as well. I think another point that's quite important here is that ECA backed financing is a very strategically important source of funding for some of our clients, especially the larger ones, because they provide not only diversification of capital sources, but also a sort of a more stable financing environment through the cycles.
Thanks. And maybe Mr. Hwang, to get a Keijsers view on what you see as the main challenges, perhaps, and opportunities for Korean ECAs in supporting this transition towards greener shipping.
Thank you for the question, since I'm assuming the role of Vice Chair at the OECD IEG, which stands for the Informal Expert Group. And our mission is to revise the OECD SSU, the ship sector understanding. I believe that the future of shipping must be green in consideration of the IMO's net zero framework. And our group is reviewing ways to revise the SSU to provide favorable terms, which will be our opportunity. So we're looking at longer repayment terms and lower cash requirements for low and zero emission ships. However, the challenge is that we have to reach a consensus among all the participating countries. And since the countries have their different views and interests, it is a great challenge for our group and for myself as a vice chair to reach a consensus when it comes to the SSU revision. But I'll try my best to reach a consensus hopefully next year.
Hopefully I've got time for another couple of questions. Then I will ask Ms. Han at KOBC about your future plans and initiatives to support Korean shipping companies in particular as the market evolves to respond. We've discussed geopolitical, but to environmental pressures.
Actually, KOBC is now building a very comprehensive support frameworks that combines financial and the non-financial programs to for the competitiveness of Korean shipping companies in today's dynamic maritime environments. So on the financial side, we aim to expand the green and sustainable finance and attract more private sector participation in ship finance. On the non-financial side, we provide eco-friendly consulting and the training programs to for the shipping companies to enhance their expertise and respond effectively to global environmental challenges. As a policy-based financial institution, we will focus on the practical and demand-driven and working closely with other ECAs and private banks to promote the continued growth and competitiveness of the Korea shipping industry.
Thank you. And then just quickly, because we are running out of time, to Brandon at KDB. Perhaps a similar topic, but maybe just quickly, what are the main challenges and opportunities you see for KDB next year and beyond?
Oh yes, our biggest challenge is that most of the Korean ship owners, they don't invest at all due to the uncertainty. So they try to use the wait and see strategy. So only a small number of ship owners like HMM, Panocean or Glovis placed a new build order to the market. So it's very hard to find financing opportunities. And even if they are on the market, and the competition is very strong, because every global bankers, and they try to take their own the space. So it's very hard to grab a chance. And we also have a good opportunity, as we mentioned. Many of the top tier global ship owners, they try to shift away from Chinese lease financing. So through this, KDB also have a chance to refinance for them. Yeah.
Thanks. And then lastly, to Joost, just to see or to ask how perhaps ABN AMRO is working with ECAs to support sustainable shipping finance or other innovative structures.
From ABN perspective, we are very interested in developments, as mentioned by KEXIM on the shipping arrangement within the OECD, and follow those closely. So curious what will come from there. What we do see due to the uncertainties in the world and also the failed reach agreement on the IMO, that the ship owners are cautious about investing in unproven technologies, especially in the absence of clear economic incentives. As a result, focus has shifted towards operational optimization, leveraging data-driven technologies to reduce fuel consumption, improve voyage planning, and enhance efficiency. And these efforts deliver tangible economic and environmental benefits. From a structure perspective, we see some innovative structures where there's always a request for longer tenors, and of course you can combine the ECA with the commercial. But especially in the offshore sector, we also see that private funds are entering the market, and that we structure deals combined with ECAs and commercial. But overall, ABN remains very committed to advancing sustainable finance in the maritime industry, and I think we keep it for this and enjoy the lunch.
Yeah. Thanks very much for sticking with us. It was a big panel, and to get through everyone and let everyone have an opportunity to speak, it's difficult in 40 minutes. I think I just want to close by A, thanking my panelists, and B, we talked about Chinese leasing a lot, and I think, it seems unlikely that the Chinese lessors are going to remain passive, and I'm sure that they will be looking to review their leasing models so as to remain competitive. But then the message, I think, from today for ship owners is, I guess, to avoid over-reliance on a single financing source. Diversification is key in financing. And I think, we can all express, from what I've heard, optimism for continued innovation and collaboration in the Korean ship financing market. So thanks very much.